Sen, VP Equity Research at ICICI Securities, to discuss what RIL's numbers could look like. Probal, what are you penciling in? Some softness in the stock price, by the way, over the last 10 odd trading sessions. You believe that that is on the back of the expectations which may come in, or rather the numbers which may come in slightly softer than expectations?
I think probably there have been other events in the world that have been happening with respect to geopolitics that may have had a role to play in the stock weakness. Without trying to get too much into it, as far as the results are concerned, yes, I think retail growth, which is in low single digits for the year, both on a YOY and QOQ basis, may be slightly lower than what people were penciling in earlier. That what is of importance is that Q3 of FY25 had a very strong base from levels of 5,500 crore. The EBITDA went to 6,800 crore from Q2 FY25 to Q3. And that would have probably impacted the base and therefore the YY numbers. But even on a QOQ level, the growth is that we are penciling in is closer to about 4%. So that is, slightly more moderate than what the numbers have been for the last couple of quarters. Geo, again, while YY growth is significant, on a QOQ basis, it's basically between 2 to 2.5%. And OTC, I think, while it is going to be fairly strong, maybe the concerns are that that strength may not hold too much in the next quarter. So to that extent, I think probably the market would be looking at guidance in terms of outlook on each of these segments and developments on the new energy front, as I think the earlier anchor was mentioning. And I think those would be the critical to sort of drive the stock performance forward. Plus, of course, whatever milestones are being hit in new energy and further news flow around Geo's listing, if any sort of update is given by the management, those will be, I think, look forward to.
Probal, let me take a general question before I come back to Reliance. GRMs have been strong, all right? You expect them to hold up, and let me also couple that with a question with regard to Reliance in particular. How much of a benefit does that translate to a Reliance Industries?
What we've really seen, I think, is obviously GRMs reached a very, very strong number in November. Diesel spreads in particular, which is a very significant part of Indian refiners' product deals, not just Reliance, but OMCs as well. Close to 48 to 50% of product is actually diesel for most Indian refiners. Those spreads have actually strengthened quite a bit. They have moderated, but even at current levels, they are above historical levels. So that's encouraging. What is really happening is that a large part of Russian refining capacity continues to be offline because of attacks and disruptions that have been caused by the ongoing conflict. And in addition to that, some disruptions have also happened in large refineries in Africa, for example, the Dangote refinery in Nigeria, which is the largest single-site refinery in the whole of Africa. That has seen utilization slip to less than 50%, and there have been concerns about product quality there, which were being exported to Europe. Large shipments have been cancelled or rejected, from what we hear. So it's been a confluence of tightening inventories and disruptions that has been continuing to drive. Going forward, I think the demand supply balance is frankly fairly balanced. So we would expect some normalization. But as of now, I think the pressure on margins due to some tightness in supply continues. And that's, of course, good news for Reliance as well as the OMCs.
Okay. And you expect that to hold up as well. I think at least that's what the bias seems like, right? Directionally.
At least over the next few months, that is what seems to be happening. Yes.
Right. Talk to us about retail, because it's a chunky piece of Reliance's market capitalization. There has been talk of softness around retail. How much of a concern is that? Is it temporary, or do you expect it to likely bounce back?
I think, as I said, there is a very strong base that the company is contending with. The recovery that started post a few quarters of weakness over second half of FY24 through to the first half of 25, that started to dissipate by the third quarter of last year. And, the fact is that this quarter is contending with a very, very strong base of both YOY as well as QOQ numbers. So I wouldn't necessarily want to make a judgment on the strength or otherwise of this segment based on this quarter's numbers. Yes, I think this quarter numbers are probably slightly weaker than, let's say, some of the other peers have reported, DMart being a case in point. But with respect to Reliance, you've got to look at the large base they're looking at, plus the demerger or the separation of the consumer products business, we would have to really keep a close eye on how quickly that business scales up. That's done phenomenally well in the first couple of years of operation, and it's set to probably grow revenue by close to 70 or 75% this year as well. So I think developments on that fronts are encouraging. Obviously, there are threats from quick commerce. There's a large base. So obviously that does play a role, but we would want to wait for a couple more quarters before taking call on how the growth will shape up in this segment. So we're not really too worried at this point of time.
Any concern with regard to telecom at all? There's of course that big demerger, which has been the talk of town, Probal. But what do you make of the telecom performance? I know you touched upon it, likely double digit on a YOY basis. But what should one pencil in?
Well, I think our telecom analyst is extremely bullish on the prospects of the geo business and the digital services business because of three reasons. And I'm paraphrasing him, so forgive me if I get some of the details wrong. But his contention is that ARPU will continue to improve on the back of higher share of broadband business, which has done phenomenally well over the last 1 year, as they have shifted to basically shifted away from laying fiber to basically using wireless radio to connect a lot of their broadband customers. I think that has led to an increased momentum in the number of tie-ups. They are tying up more than 1 million subscribers, from what we understand, on a monthly basis, which is a very very high and strong growth rate. And typically, ARPUs for a broadband subscriber are definitely much more than that of a typical mobility customer. So that should, even in the absence of a tariff hike for the core mobility business, that alone should basically drive an improvement in ARPU. Secondly, the digital services part of it, which essentially hosts the enterprise and content and all the other parts of their digital services business, the share of that in consolidated geo platforms business has been growing steadily. That should also start to make a real dent over the next 12 to 18 months. And of course, the valuation unlocking that will happen as the listing basically progresses, that itself should basically provide cause for enough of a re-rating. So, again, fairly strong prospects coming up. More importantly, the capex cycle for that business, I think, is going to slow down now that a lot of the initial work as far as infra and capex for 5G has already been done. The balance sheet should also start to basically strengthen for this segment, and in turn improve the FCF yields of the overall consolidated RIL as well, in our opinion.
Okay, this recent correction, Probal, with regard to Reliance Industries, we've seen nearly a 10% correction. It's a big crack on a very very large cap stock. Opportunity, you reckon?
Yes, I think our conviction hasn't really changed. We had upgraded the stock based on the reasons that I mentioned. I think OTC segment probably will remain resilient. Geo should increasingly see stronger numbers, both on profitability and improving balance sheet. Overall leverage in the business should improve. Overall return ratios should actually improve going forward. And retail, even with, maybe there will be always some volatility in terms of seasonal factors, individual factors on certain quarters. But directionally, I think retail will continue to deliver strong growth. There are geopolitical headwinds, no doubt about that. And frankly, it's impossible to take a call today on how Iran, Venezuela, or Russia will really play out in the global energy markets at this point of time. So that uncertainty aside, I think this fall provides a good opportunity to get in as far as we are concerned.
All right, Probal, thank you so much for coming in and speaking with us. This has been fruitful, the entire discussion. All right, and viewers, what we'll do is slip into a very short break. We'll continue conversations on the other side of that break.